Well, we do have to verify employment.
Okay, verify employment.
That's one of the only things that we do actually verify, is that you're actually still employed, and we have to have that information for the employment on the application.
Okay.
And the bank does call right before we fund the loan to verify that. So, you know,
Right.
most of the credit requirements, you know, we don't have to verify.
Right.
But now we do have to verify that
Employment.
one little, yeah.
Well, that works.
Which is a good thing. So yeah, it's a
Very
fantastic
cool.
opportunity. We're really busy with these.
I'll bet.
You know, if you have bought a house in the last 18 to 24 months, and you have greater than a 5.5% 30-year fixed mortgage, I can save you money.
Excellent.
I can save you money. And most of the time, we're actually doing these with almost no money out of pocket, or maybe just the interest that accrued for that month, and then you skip a monthly payment, and your new terms start 30 to 45 days later.
That's great. Now, do you have mortgage insurance? Does that come along with that?
Yeah, the mortgage insurance is still going to be part of that. And what I want to get out today is that you only really have about 3 weeks before FHA changes again.
Uh-huh.
Okay.
I heard about the changes.
Yeah.
Sense of urgency, right?
Yeah.
You have,
Yeah.
if I know that if you've bought a house in the last 24 months with an FHA loan, you're getting bombarded with mailers. And if you want to talk to somebody local about your situation, just give me a call. And I'd be more than happy to look at your opportunities for lowering your monthly payments. Because if you want to talk to a real person, it's not like you can just, you know, call off of whatever's coming to you in the mail.
Right.
You know, that's not always how people, you know, want to be dealt with.
No, you don't have one-on-one conversation with someone.
Right, and so that's what we do at Franklin Loan Center. That's what we're doing with all of our clients, meeting them face to face, going over the situation, showing them on paper, black and white, what their payment reduction is actually going to be, and you know, give me a call. And
tell them where to get a hold of you.
You can reach me at 760-835-5663. 760-835-5663.
And so what does it cost to actually go through this program, this FHA program?
It all depends on how we structure the loan.
Okay.
It can cost anywhere from $2,500 down to nothing, depending on how we structure it. It's a great opportunity, but because of the changes that are coming in the next 3 weeks, there's going to be a change in the monthly mortgage insurance premium, the monthly amount that you actually pay for your mortgage insurance, and it could affect essentially how much money you do save every month, because if you put this off, you could actually cost yourself a little bit more, because if we can get you locked in,
I was going to say, get you locked
in and pull your case number before the changes, we can save you a lot of money. Essentially, the monthly mortgage insurance amount is doubling. It's going from 0.55% up to 1.0% per year, which is, you know, figured on a monthly basis.
Well,
so
what does that mean, let's say, on a $200,000 mortgage?
On a $200,000 mortgage, let's say that the monthly mortgage insurance today is $120 a month. It could mean that your mortgage insurance is, you know, more than $200 a month.
Gotcha. Okay. Yeah, it makes a big difference then.
Makes a big difference.
Okay. Yeah. So how does that differ from private mortgage insurance?
Yeah, FHA mortgage insurance is actually it's a government insurance. The HUD department actually insures your monthly loan. Okay. Private mortgage insurance is run by private mortgage companies. So they typically have more stringent guidelines. They can determine what they will insure and what they won't insure. A lot of times it's more expensive monthly, you know, but with the changes coming up, we'll see kind of how that, you know, shakes out.
But with this government program, their guidelines aren't as strict.
Right, you can have lower credit scores, higher debt-to-income ratios, which means that you could qualify for more and have a little bit, you know, worse off credit and qualify FHA, where, you know, compared to private mortgage insurance, you're looking at, you know, needing a 720 FICO score and a 41% debt-to-income ratio, where with FHA, you only need a 620 credit score, and you can go up to almost a 55, 56 back in debt to income ratio.
Gotcha.
So you can afford a little bit more, you can qualify for a little bit more, and it's a great opportunity because FHA is definitely helping a lot of home buyers and a lot of homeowners right now lower their monthly payments because of that affordability index is so great.
Right. Right. And is there a down payment necessary still?
Yeah, 3.5% is your minimum down payment.
Mm-hmm.
That's up from 3% a couple years ago, but only 3.5%
Hey.
down. You know, no big deal.
That's right.
You know, you can get a gift for the money for
Okay.
the down payment from a family member. You can also get it from like a church if you have a place where they're willing to work with you and give you the gift. You can get it from a nonprofit organization. You can get it from an employer even. So
They are very liberal.
They are.
Yeah.
They are. As long as you can source the down payment and do the paper trail for the source of funds,
Okay.
you'll be okay.
Cool.
Yeah. The banks don't really like dealing with cash.
Right.
Okay, so the FHA program is still alive and well.
The FHA program is alive and well.
And it's not just for first-time homebuyers.
And it's not just for first-time homebuyers. That's one of my
Yeah.
the biggest misconceptions that I have is, you know, I do a lot of loans for people who are move-up buyers. They have a house right now, and they've had it for a little while, and they want to move up. They want to get a newer home, something a little bit bigger, maybe a little bit smaller, depending on the transition of the family.
Depends on what chapter in their lives they're in, right?
Exactly. And as long as it makes sense, we can get them an FHA loan as with their current primary property. They turn that into a rental property. They get rental income off that, and
Cool.
they move in and they close. So it's a great opportunity.